Second tutorial, question number 1. As a question, briefly explain, describe the following prices that can be used to measure the value of a country's output. So first one, it is base price and producer's price and market price. I can wire put the Right. So the first one is base price. The base price is the price at which manufacturer prepares and sells his product or service. It shows the income gained by the manufacturer per unit of output. So that is the base price is the price received by whom? Received by the manufacturer, right? Received by the manufacturer. So it's not the manufacturer's price, right? Because the total cost plus, is there any other taxes incurred or paid, should paid by the manufacturer? It is with the base price, right? So that means, so next point, tax paid by the manufacturer on the product are not included in the base price, right? So the base, if in the base price, it is not that the tax is not included, right? So tax is not included, since that means what? Base price is totally received by the manufacturer. Why? Because tax is not included. If tax is included, that is manufacturer's price, right? So, and subsidies received by the manufacturer is included in the base price, right? I'll explain it. So base price will be construct base price equal base price equal total cost of production plus subsidies received by manufacturer, and also what else? Yeah, that's it. So total cost of production including consumption of fixed capital plus subsidy received by the manufacturer. So that's include the base price. And next, freight or transport costs are not included in the base price, but other taxes paid on the production are included in the base price. What are the other taxes on production? That means some kind of license fee and other charges. I think we'll explain it later. What are the there's a separate question. What are the other taxes on production? Right? We'll study that one later. So that's the base price. It is include cost of production plus profit margin actually. So plus profit margin of whom? The manufacturers, right? So that is including the cost of production, because like the profit margin is the cost of entrepreneur factor. So it is already included in here. So here rent plus salaries plus rent, salaries, and what else? Profit and interest plus also CFC, consumption of fixed capital. So those are the cost of production, right? Here I included the profit margin as well in the cost of production. So all the things plus subsidies reduced by the subsidies received by the manufacturer. එතකොට මේක තමයි manufacturer earn කරන income එක වෙන්නේ. So base price is the income received by manufacturer, right? So that's it. That's the base price. And the next one, manufacturer's price, right? So now you know how to calculate base price. Manufacturer's price equal to one more thing. What is it? Subsidies, right? Here subsidies included. Subsidies received by manufacturer process, it is included. So we have the tax is not included, right? So manufacturer price equal base price plus net tax on products, net tax on products, right? So here if there is any net tax on product, that means that should be paid by whom? Not the consumer, by producer or manufacturer. If there is any tax that should be paid by the producer, it should be added to the base price, then can calculate the manufacturer's price. So let's read the point. Manufacturer's price refers to the value of goods and services after the deducting subsidies received by the manufacturer. So here I told you subsidies received by the manufacturer is included at the base price, right? So now what they're going to do? They are going to do here plus net tax means plus taxes paid by producer minus subsidies, because subsidy is already included, right? So now subsidies are deducted. Subsidies received by producer. So that's the meaning of adding net tax. Net tax addition, adding net tax means tax paid by the producer will add, and minus subsidies received by the manufacturer, because it has already included in base price, right? Now tax has been added and subsidies has been deducted. So that means manufacturer will sell it for manufacturer's price. Even though manufacturers sell it at manufacturer's price, that means let's say total cost of production including all these factor costs and consumption of fixed capital 100,500. So he has already received 100 subsidy. So it is 1,600, right? Now base price is 1,600, and that means he has to pay 200 tax for the unit. So 200 tax for the unit have to pay, right? So manufacturer is not going to pay by himself, right? Manufacturer is not going to pay by himself. He will add it to the price, right? Added it to the price, and he already received 100 as subsidy, so he can deduct that 100, right? So now plus 200 minus 100, that means 1500, right? That means 1500. It is his expectation, right? His expectation on the product, that is the expectation, but it has given subsidies, so that is the price received by manufacturer. So now there is tax 200, so it has to be added, and already subsidies are there, it can be deducted. Now 1700, yes, 1600 is the 1800, 1700, right? 1700, because 1700 is the selling price of manufacturer to next intermediary party, right? Here let's say manufacturer, and he is expecting the base price, that means 1600, that he is expecting that to receive it by himself 1600, but he know that he have to pay 200 tax, right? Pay 200 tax, that should be added, and he received 100. He received 100 subsidy, so now he can sell the product at 1700, right? This is the manufacturer's price. This is his expected price, that is the base price. This is the price which he need to sell to receive the base price, because he have to pay 200 tax and he can receive 100 subsidy. So after adding net tax on the product, he can sell to next intermediate party, whatever the intermediate party. So he's selling at 1700, right? That is the manufacturer's price. Manufacturer's price, right? But keep in mind, this manufacturer's price means manufacturer's selling price, not the price received by the manufacturer. Price received by the manufacturer is base price. The difference is goes to where? Difference 100 is tax income of government, right? So I think it is clear. Is there any problem with that, Chakra?
No, sir, all clear.
Right. So you can write down manufacturer's price equal base price plus net tax on product in the box. So net tax on products mean tax paid by the producers minus subsidies received by the producers. Subsidies need to be deductible because it was at the base price, right? So you can write down. Right. So the consumer price, next price is consumer price. I think we have to find the consumer price. So that means the price paid by whom? Price paid by the consumer. So manufacturers receiving price is Manufacturer's receipt price was base price. It is the 1,600 that he is expecting 1,600. So to receive by himself, to receive 1,600 rupees by himself, he need to sell his product to next person at which price? If there is tax, he need to be added to the price. If there is any subsidies received by himself, he need to deduct it, and the next price is 1,600, 1,700. Then he can sell next this product to his intermediary at 1,700. So it is the selling price of the manufacturer. Selling price of the manufacturer, that is the producer's price. Right now, the wholesaler has been purchased it at selling price or producer's price. He will send them to market. Right, this is the market. So market, we have the product at how much? Let's say at consumer's price. We'll see what is the consumer's price. So to send them to the market, that wholesaler need to incur what? Incur transport cost. Right? Now actually he purchased that 1,700. No? So his intermediates cost is 1,700 actually, right? So the cost is intermediate cost is producer price, right? That is the cost. Cost equal is cost equal to producer price. So to that producer price, of course, he will add transport cost if any, and also he will add his profit margin of himself. That is the income for himself, profit margin, and now he can sell it to the consumer. But if there is any taxes that need to pay by consumer, he needs to add that tax on consumers to the product. Tax on consumers. That means non-deductible tax, right? That means non-refundable or non-deductible tax on consumer. So all the things together, consumer can purchase that good at consumer price. Let's say transport cost is 100 or 150. Profit margin is 250 per unit, and non-deductible tax is equal to VAT, right? The example is VAT. Let's say VAT is equal to 200, right? VAT is equal to 200. So example is VAT. So altogether, it was his cost is 1,700, and 2,700 that he will add 150 transport cost, 250 profit margin, as well as non-deductible tax. Because why he add non-deductible tax? Because the reason is the liability, the consumer's VAT should pay by the intermediary, right? The vendor should pay the consumer's tax. Then consumer ගෙන් ඇවිල්ලා ඔයාගත්ත අපි හිතමු අපි මංචියකින් බිස්කට් පැකට් එකක් ගත්තා නම් බිස්කට් පැකට් එකට VAT මෙච්චරක් අහලා තියෙනවා කියලා ඉන්කම් ටැක්ස් එකකින් ගෙදරට ඇවිල්ලා ඒක අරන් යන්නේ නැහැ. එතකොට consumer එක ගෙවන්නේ කාටද? වෙන්ඩර්ට. වෙන්ඩර් තමයි intermediate විදිහට ඔක්කොම ටික එකතු කරලා consumers ලාගෙන් tax එක අරගෙන that he will pay them to the government. So he is the actually legal bearer of the tax, right? So then he will add all these three items, and the final price is 1,700, 1,800, 2,000, 2,100, 2,300, right? 2,300 is the consumer's price. The consumer have to pay at the market for the product. It is 2,300. So that is the all the three prices, right? I'll explain it again. Base price that received by the price which received by the manufacturer. To receive that price, again, mama atuma මට මේකට මං කියන්නේ ගාන අර මං කාට හරි වුණා මට අතට 1600ක් ඕනේ. ඔයා කැමති ගානකට විකුණලා මට 1600 දෙන්න. අන්න ඒ වගේ තමයි මේක මේ 1600 is the base price. I need at least 1600 for this product. Subsidies තියෙනවා නම් ඒත් ප්‍රශ්නයක් නෑ. Subsidies ඇතුව හෝ නැතුව මට ඕනේ 1600. ඊට පස්සේ එයා බලනවා එහෙනම් මම මේක ඔයාට විකුණද්දී එහෙනම් මට රුපියල් 200ක tax එකක් ගෙවන්න වෙනවා. I have to pay 200 tax. I will add that tax to you. Why? Because I don't pay tax because I need minimum 1600. If there is any tax, I will add that tax on you. කියලා ඊළඟ කියන්න දෙනවා. එතකොට එයා කියනවා අයියෝ ඔයාට රුපියල් 100ක සබ්සිඩි එකක් හම්බුනේ. Then I will deduct that subsidy. So it is 1,700. බලන්න මේ 1,700 is the selling price. දැන් මෙයා මේක 1,700 වලටනේ විකුණන්නේ. 1,700 වලට විකුණුවම මොන එයාගෙන් ඉල්ලනවා ගවර්න්මන්ට් එක ඇවිල්ලා දෙන්න ටැක්ස් එක. අන්න එයා ටැක්ස් එක දෙනවා 1,200ක් එළියට. 1,700 වලින්. මෙයාට සබ්සිඩි එකක් හම්බෙලා තිනවා තව 100ක. එතකොට net එක එළියට යන්නේ කීයද? 100යි. මෙයාට සබ්සිඩි එකක් 100ක හම්බෙලා තියෙනවා. ඒතකොට 100ක් එළියට ගිහිල්ලා මෙයාගේ අන්තිමට අතට එනවා 1,600. Right? So that's the reason, that's the difference between base price and producer price. Base price is the received by the manufacturer. Producer price is the selling price of the manufacturer. Right? So both this base and producer price is related with manufacturer. Right? And producer price also the cost of intermediate. Right? That means retail or wholesale. So then wholesaler will add transport cost, profit margin and tax on consumers. Then it will be consumer's price. So that's the scenario. So for the consumer price, you can write down consumer price equal producer price. Producer price plus transport cost, profit margin and tax on consumers. As example, VAT, non-refundable tax on consumers. Can you? So producers consumer price equal producer's price plus transport cost plus profit margin plus tax, non-refundable tax or non-deductible tax on consumers. Right up. Right, so next question. Second question, what are the other taxes on now? Right, I told you in the under the base price, there was second point, right? Tax paid by the manufacturer on the product, not the second point. Yes, third point. Under base price, third point, second sentence, but the other taxes paid on the production are included in the base price. Tax on production is included in the base price. Keep in mind, if there is any tax on production process, that means tax on production process, it is included in the base price, right? So base price is include cost of production, including profit margin of the producer, subsidies received by the producer, and also if there is any tax on production. Tax on production and tax on products are two things, right? Tax on products mean when I send them to the market, there's tax that should pay by the manufacturer, right? That is the tax on products. But tax on production means if there is any tax on production process, right? That means, as example, liquor production process එකකින් නැත්නම් asbestos, right? Asbestos sheet වල production process එක නිසා environment pollution එකක් වෙනවා නම් ඒ production process එකට tax එකක් ගහනවා. Then that production process tax is included at the base price, right? But what is this tax on production in separately? So we'll discuss on that part now. We'll see. What are the other taxes on production mean? Provide few examples. Explain why it is a value added component to the base price. So here, first one, in the manufacturing process of a country, the government facilitates to the manufacturer in several ways, and it's a primary input to the manufacturing process, right? කියන්නේ manufacturing process එකට government එකෙන් ලොකු support එකක් හම්බ වෙනවා, right? උදාහරණයක් විදිහට infrastructure facilities මේක තියෙනවා. The government provide as a large number of facilities such as providing rules and regulations. That is the first facility, right? That means අපි හිතමු copyright වලට rules and regulations තියෙනවා. වෙන අයට patent එක දෙන්නේ නැහැ, යාට විතරයි දෙන්නේ. දැන් සිමෙන්ති හදන්න ඕන කෙනෙක්ට බෑ. ඊට පස්සේ petroleum පිරිපහදු කරන්න, right? Purify scene එක කරන්න හැමෝටම බෑ. ඒකට විශේෂ බලපත්‍රයක් තියෙනවා. Rules and regulations තියෙනවා. And next, administration services. The administration services also provided by the අපි තම electricity එක ගන්න ඕන නම් ඒකට අදාළ documentation වැඩ, ඊට පස්සේ ආපහු එතනට transform එකක් ගෙනල්ලා හයි කරනවා, ඒ වගේ දේවල්. ඊට පස්සේ administration service, license and infrastructure development. මොනවාගේ license ඕන නම් ඒවා අරගෙන දෙනවා. අපිට මේ export කරන්න license එකක් තියෙනවා. නැත්නම් අපි හිතමු මොනවාහරි liquor produce කරන license එකක් තියෙනවා. Asbestos හදන්න license එකක් තියෙනවා. ඒවා නැතුව කරන්න බෑ. And that's the license. And also infrastructure development. There's infrastructures තමයි අර මම කිව්වා transform එකක් ගියලා ළඟින් හයි කරනවා. මොකද දැන් නිකන් ගෙදරක පොඩි business එකක් කරනවා වගේ නෙමෙයි. අපි දන්නවා ලොකු factory එකක් ගාව අනිවාර්යයෙන් ඒගොල්ලන්ගේ voltage එක electricity consumption එක වැඩි. ඒකට නිකන් power එක නිකන් මේ විද්‍යුත් current එක ගහලා ගන්න බෑ. ඒ power consumption එක වැඩි නම් ඒක ඉස්සරහින් transform එකක් දාන්න. Right? Infrastructure development and those facilities are provided by the government. To conduct production required these services, right, to conduct the business activities, these services are necessary. Payment made to the government for such services are called other taxes on production, right? ඒතර ඒ වගේ එක එක සර්විස් ගවර්න්මන්ට් එකෙන් දෙන්නේ නිකන් නෙමෙයි. ඒගොල්ලෝ කියනවා ඕගොල්ලෝගේ මේ ප්‍රොඩක්ෂන් ප්‍රොසෙස් එකට අපි දෙන උදව්වට අපි ටැක්ස් එකක් දානවා මෙච්චර. So that is the production, other tax on production. As example, ඒගොල්ලෝ transform ඒ මොකක්යි license එකක් දුන්නා license fee එකක් ගන්නවා. ඊට පස්සේ මොකක්යි pollution එකක් environmental pollution එකක් වෙනවා නම් environmental එක tax එකක් ගන්නවා. ඊට පස්සේ government එකකින් transform එකක් ගහුවොත් ඒකට දෙනවා property fee එකක්, property tax එකක් ගෙවන්න කියලා. මොන ඔය වගේ. Other taxes on production are also there. Other taxes on production are treated as revenue generated on behalf of the government. Explain why it is a value-added component. So it is a value-added component of not the producer, right? It is value-added, but not for the producer, because producer is just do the expenses. Then value-added to whom? To the government. Because government service, that is a service provided by the government, since the value is added to government service, right? So other taxes on production are treated as revenue generated on behalf of the government when calculating the gross value added at base price, right? So that is the taxes on production process. Right? It is a value-added component of producer or government. It is a component of government, but the payment is done by the producer. Right? So that's why it is considered as value-added component. Right. Next one. There are few prices. Tell me those are included in which price, right? So first one, licensing fee or license fee. Is it including base price or producer price or market price? Chaturya? License fee.
Base price.
Yes. So that means base price mean because it is a component of this license fee. So it is in base price. Base price එකේ තියෙනවා කියන්නේ තුනේම තියෙනවා. Right? It is in the base price. How many are there? 7. Price, producer's price, consumer's price. Means first one. Licensing fee. Licensing fees. It is added when added to the base price, added to here, and all the three are included because මෙතනදී add වෙනවා කියන්නේ තුනේම එක include වෙලා තියෙනවා කියන්නේ. Next one, financial transfer to manufacturers to prevent environment pollution. Environment pollution එක නවත්තන්න කියලා දෙන මොන හරි transfer එකක්. එතකොට ඒක මෙතනදී අපිට අදාළ වුණේ නැහැ. හරිද? environment pollution එකට ගහන tax එකක් නම් අපි ඒක කතා කරා under the production, other production on tax, tax on other production, but financial transfers to manufacturer due to preventing environment pollution is not included at any of these. It is a separate. Next one, unit tax charge on the product. Unit tax charge on the product. It was initially added at producer's price, right? It was initially added at producer's price. Can you remember? Base price plus tax on products, right? So it is in here, mainly added in here, but here it is not, and here also, yeah, because obviously. So the fourth one, subsidies on production. Subsidies on product, not the production, subsidies on the product, right? So subsidies on product, I told you subsidies on product initially it was there, right? It was there at this point, but when it comes to producer's price, you can remember plus base price plus net tax. Plus net tax means tax added, subsidies deducted, right? That's how net tax added. So subsidy is already at the base price, but here it was deducted, and after all of these prices, subsidies are not there, right? Because it was deducted at when it transferred into producer's price, right? So it is included only at base price. Right. Next one, transport cost. Transport cost, I think you can remember it was not here and not here. It was added at here and only at consumer's price. Right. So the next one, wholesaler profit margin. A wholesaler profit margin, wholesaler මෙතනදිත් එයාගේ profit margin එක නැහැ. Profit margin is included at the market price of consumer's price. Next one, value-added tax, VAT. VAT is added on in here. Here it's not. Here it's not. So this is the answer, right? So the next one, as a difference between concept of gross domestic product at market price and gross national income at market price. Something that we know. You done with this or still right?
Done, sir.
So what is the difference between GDP and GNI? What's the difference between GDP and GNI? Right here, GDP means total production within an economic territory, right? Simply it takes total production in an economic territory. So that's the GDP. And GNI is total production of residential units in whatever the economic area. Maybe in Sri Lanka, maybe in Australia, maybe in India, whatever. It doesn't matter. China, whatever. Right? So here, what we have identified, the economic territory was the main thing, right? But here, what is the main thing? It does not matter which territory. The matter is whether it is resident or non-resident. So here, only residents, right? So that's the main difference, right? We'll read the note. GDP is the total value added of goods and service produced by all residential economic units. All residential economic units within an economic territory over a period of time, right? So all residential economic units with an economic territory over the period of time. So that is the GDP. GNI is the total income generated by the resident units of a country over a period of time, regardless the economic territory. When calculating the GDP, it is considered in which economic region was productive, right? In product or income generated. Not considered who are the owners of the resources. Resources or resource owner may be resident or non-resident. It doesn't matter. Used to create the product, whether it's belong to resident or non-resident. And the next point, the calculation of national income does not take into account the economic region in which area of the revenue was generated. Actually, we doesn't care about the area under the GNI. Therefore, calculating the national income, it includes the national income generated by all the residents of the relevant countries and resident in the rest of the world, right? Residents in the relevant countries and residents in the rest of the world, right? Whatever. The difference between, right? So they are asking, you need to provide definitions as well as difference. So what is the difference? Difference is difference between GDP minus GNI. It is equal to what? Net primary income. Net primary income. So wait, GNI and GNI minus. You can write down this in the box. We call it net primary income or net foreign factor income. Right. Next one. The question, next question also relevant in that part. What is net foreign factor income? Or what is net primary income? Right. So next, Net primary income. That's the fifth question of second tutorial. Net foreign factor income or net primary income. I think I just explained. That means it is the difference. Initially, you can identify it is the difference between GNI and GDP. So definition. What's the definition? It is the definition is the difference between primary income receipt and primary income payment for the rest of world. So let's read the first point. Net foreign factor income or net primary income is the difference between primary income receipt and primary income payment. Right? That's the first. Then we can identify what is the primary income receipt from rest of the world, what is the primary income that need to payment to the rest of the world. Right? Primary income receipt is earnings of residents. Right? Earnings of residents. That means earnings earnings of residents over a period when there are factors utilized in the production activities in other foreign countries. So they are in the foreign countries. Right? So that is the primary income receipt. If there is any resources belongs to resident unit, right? If there is any resource belongs to resident unit and they have generated some productivity things, so that is included in gross national income, right? So that is the primary income receipt is total earnings of residents over a period when there are factors utilized in production activities in other foreign countries, right? So that is the receipt from net primary income. So, and also Sri Lanka also has utilized other countries' resources which belong to other foreign parties, right? Such as investments, that capital, lands belong to other parties, labors also belongs that belong to other nations. All these people, right? All these people and all these factors that ownership is not belongs to Sri Lanka, it belongs to someone else. That means non-resident, right? So primary income payment is the next point. Foreign income earned by using resources which belongs to foreigners that utilize for domestic production. So what was it again? That Sri Lanka has produced resources utilizing non-residents. So it does not belong to gross national income in Sri Lanka. So we have to pay that their income, their primary income need to pay, right? But using Sri Lankans, that means using residents' resources that other foreign countries has produced products with their country. So it finally comes to Sri Lanka, right? It finally comes to Sri Lanka because residents are in the Sri Lanka. So income is finally stopped at Sri Lanka. So that's why we need to add add primary income receipt and deduct primary income payment. So that's the different. That's the definition of net primary income, right? I think all the things are there. You don't need to write down anything. Next one. Right, next one, introduce the concept of fixed capital consumption and what is the practical significance of this concept. Read the question with answer. Is it clear things or not?
Clear, sir.
So, what is the fixed capital consumption? Fixed capital consumption, or we call it simply in accounting depreciation. And we call it national accounting. Uh, fixed capital or national accounting or minimum part. Gross investment is there. National accounting, gross investment is there. So there are two items. First one, capital replacement. And second one, net investment. Replacement of fixed capital or fixed capital consumption, or consumption of fixed capital, depreciation, or whatever we can identify as the same word, right? So because of consumption of fixed capital is equal to capital replacement, right? That is a part of those investment. So we'll read the answer. Net foreign factor in not the next one. Next one. This refers to the amount of resource that allocated to repurchase the capital goods using the manufacturing process of the at the end of their life, right? When we use capital, right? When we use capital, what are the capital? Whatever the capital, right? Let's say land or buildings. Land is not pure capital. Building. Land again, if there is any wall, around the land, so that should be building, right? That should be under the value of building. තාප්පයක් තියෙනවා නම් ඒ තාප්පේ it's not the land, right? That wall should become, or if there's any fence or whatever the things around the land, it is also building. So buildings and machinery, vehicles, and animals that use in production, all the things are capital. So here, when we use this capital factor for the production, it will depreciate, right? So it will depreciate at their end of lifetime, right? At the end of lifetime, at the end, to continue the production process, they need to be replaced. They need to be replaced. So for that, we need to identify a significant amount that need to for the replacement. So that is the consumption of fixed capital. This refers to the amount of resource allocated to repurchase the capital goods used in the manufacturing process at the end of life, right? This is monetary estimate. It is not actual situation. It is depreciating. We can see it, but actually we cannot identify this much has been depreciated. This much has been depreciated. So it is hard to identify. So we identify it equally throughout the period, right? So this is a monetary estimate of the amount of money used or spent on capital instruments during the relevant period, right? Capital resources depreciate with their usage over the time, whether it's used or not, right? Whether we use the building or not, it is obviously depreciated, right? When we use it, the depreciation rate is higher, but even though we did not use it, it is depreciated. If there is machine, if there is camera, if there is laptop, even though we use it or not, it is obviously depreciating. But when we use it, depreciating rate will be little bit high, right? So, and depreciate due to obsolete item due to new technology, right? That means computer එකක් වගේ නම්, right? Computer එකක් වගේ නම් අපි අතන use කරන්න ඕනෙත් නැහැ. අවුරුදු 3-4ක් ගියාම technology එක කොහොමද පාලන වෙලා it has to be replaced, obviously, right? Computer එකක් වගේ නම් කොහොමද අවුරුදු 5ක් වගේ ගියාම obviously need to be replaced. No? So that's mean the obsolete item due to new technology. The value of the provision made for these depreciating capital assets is called consumption of fixed capital, right? So next point in the page number 4 top, the value of total output is measured at a gross value, right? When we produce something, the total output is at their gross value, including fixed capital consumption, right? Because it is an expenditure, no? So that expenditure should be included in the value of output. So we value output at gross amount. It is called the gross value of output. Fixed capital consumption must be reduced when gross output value transferred or converted into net value of output. If we need to identify what is the net amount of this output, we need to reduce or eliminate the fixed capital consumption amount. So I have given the final equation as well. Net value of output equal gross value output minus consumption of fixed capital. Right. Is it clear or not, Chakra?
Clear, sir.
Right. So the next one. Question number 7. When the GDP is given at the market price, what adjustment should be made to get the net domestic production at the market price? It is very simple. What we need to do, just one calculation. We just study gross value should be transferred to net value. So just remove the fixed capital consumption. What's the answer? In order to obtain net domestic product at market price, consumption of fixed capital must be removed from GDP at the market price. So net domestic production equal gross domestic production minus consumption of fixed capital. Right. Question number 8. Please read the question and answer. Right, what's next? Distinguish between gross domestic production at current price and gross domestic production at fixed price. Current price and fixed price. To fixed price, there's an alternative word that we use in the economics, that is fixed price is equal to the constant price as well, right? Constant price. So both are the same. That's the only difference between fixed price and constant price in economics. Right? So we say the answer. Right. Gross domestic product at current price is the value of goods and service produced in the given period of time at a current market price. Right here, before the explanation, I'll explain a bit. So current price. Current price is the actual market price. The market price of the present market price. Right? Present market price is the current price. So if you need to calculate the nominal GDP, just output into their price. You can calculate that under current price, right? If the quantities you know, Q. If the prices are known, that means current prices. So just multiplying them, you can calculate market price or current price output. That means total value of output. Total value of output at current price or market price. Just like it is simple. Right? But when it comes to constant price, so we identify what is the constant price mean. Normally, there is a right when let's say in 2020 and 2022, right? 21 and 22, right? So the output is 5,000 quantity, right? Quantity is 5,000. Let's take the simple way, just 1,000. And price is 100, right? And in 2022, with the COVID-19 and with all the other economic crisis and all the bullshits done by the political parties, government in Sri Lanka, the output has been reduced up to let's say 800. Right? But even though because of the people doesn't know about these constant price and market prices, just they say what? They say in 2021 market value of output equal 1,000 in here, 100,000, right? But in 2022, let's say prices has been increased up to this shitty inflation problem, right? Actually, this is a kind of massive problem to Sri Lanka done by all the political parties and all the authorized parties and the control parties of the all the government authorities, right? Because there's a president or the head of central bank, right? So that he said printing money does not impact on the price level in Sri Lanka. And he has printed actually under his authority. So he has printed more than 3 trillion with these 2 years, right? 3 trillion money in 2 years without any incremental of production. So obviously we can expect kind of huge inflation within all over the period. That means if today prices are kind of, let's say, average price is 1,000, obviously next month it will be 1,100. Next month, obviously this will obviously happen. No need to no need to investigate the market, no need to just analyze the market, no need to that means economic expert confirmation. We don't need them. So just I can see with this amount, with the amount of money printing, right? Money printing has been increased by 24 times more than previous years, right? 24 times. That means more than 3 trillion, right? So obviously, month by month, week by week, day by day, price level is increasing. We can experience that, right? Obviously, this will happen all obviously at the end of period, right? Until the end of 2022, this will happen, right? So the cost of living would be massive, right? So anyway, I just පොඩ්ඩක් මා මේක පිටපැන්නා අපිට ඕනේ දැන් I just want to say the prices has been like 150 in this year 2022, and when 800 increased by 150, it is 120,000 multiplied by here 100,000, 80,000 plus 40, yes, 120. So මිනිස්සු දන්නේ නැහැනේ මේ දේවල් දැන්. හරි. එතකොට ඔය ගොඩක් අය ඇවිල්ලා මොකද කියන්නේ? that all the parties that they have I personally that heard in the interviews and all the TV programs that they have said the market value has increased by very large amount. That imports, even though we don't have foreign currencies, that import value has been increased more than previous year. The value has increased. The value can be increased when the price is increased. It doesn't mean that quantity has increased, right? Here you can see market value of output has increased by increased by 20%, right? But the actual output, real output, has been reduced by 20%, right? Here actual output has been reduced by 20%, but when we see the market value of output, that we can see 20% incremental, but the actual output has been what? Real output has been decreased 20%. So this is the inflation can be seen 50% inflation, right? So that's why we need what? We need constant price. We need constant price because it is not suitable to use market values when make decisions, right? So then we need to identify output at constant price. Now, what is the constant price mean? Constant price means we do not multiply by 150 we just multiply by constant price. Here 1000 into 100, 100,000, 800 into 100, because price is constant. Here price is constant. Here we don't use this price. Instead of that, we use 100 because constant price. 800 into 100, it is how much? 80,000. Now we can experience the same impact on the output when we calculate the constant price of output. 100,000 and here 80,000. That means constant price. Constant price of output. 100,000 has become transferred to 80,000. So that means 20% minus of output value. So that's the difference between market price or current price and constant price. So when we make the decisions, when we calculate the economic growth, when we calculate the statistics, that we better to go with constant price instead of market price, because market price is included price impact, inflationary impact and impact on output, both will be mixed at market price. But when we calculate the output at constant price, we remove the inflationary effect. So there is only the real effect. Let's read down. Gross domestic product at current price is the value of goods and service produced in a given period of time, normally 1 year, at current market price in that period. This assessment includes change in the price level and the quantities of product. Change in the price level as well as the quantities of product, both will increase, both will include at the market price. Therefore, GDP is calculated at constant price to eliminate inflationary effects from the current price of GDP. Fixed price of GDP, fixed price GDP is calculated by the subtracting the price level change including the GDP at current price. So we just use same constant price, so the inflationary impact will remove. Whether the output really grown or not through over the time. Before that, I think we have to fill a box. Just what is to eliminate this inflationary effect, you have to use price indexes. Before that, yes, there was 1 point more. To eliminate this inflationary effect, you have to use price indexes. So what we need to write down within the box. So using price index, that we can calculate constant price GDP. So that need to be filled with the in that box. Write down constant price GDP or GDP at constant price. GDP at constant price equal GDP at market price to eliminate inflationary impact, that we need to divide this by how much? Divide this by price index. Price index of relevant year. Right, megapixel GDP at market price in year 2020 21 divide price index of relevant year, that means 2021, into multiply by what is the constant price index? It is 100, and it is 100. So this is how to calculate constant price GDP. So you can put this into the box. Right. What is it? Constant price GDP at constant price equal to GDP at market price in relevant year divided by price index of the relevant year multiplied by 100. And after that, after the box, whether the output really grown or not, to over the time, we'll be able to know by calculating the country's GDP at fixed price. It is important to measure the economic growth of a country, as it only measures the change in the quantity, right? Because when we calculate the economic growth, that we need the change in quantity, not the price level. Prices can be different in whatever the year. So price doesn't matter. Actually, when the quantity increase, that we identify but economic growth. If quantity is reduced, that we identify economic recession. Just simple. Real output of goods and service by eliminating the price change. When the price index is provided, the real GDP can be obtained as follows. That is, I think the same works. Yes. Real GDP also can be calculated. Real GDP equal nominal GDP divided by price. Same, right? Real GDP is GDP at constant price. Price index multiplied by constant at the base year price. Base year price. Base year price is most of time it is 100 or 1000. Right? Just fill that one as well. next one. Explain the concept of GDP deflator. Right? GDP deflator. So actually we can calculate just to identify the GDP deflator in this price index. This price index is the GDP deflator because GDP deflator also and price index, right? So GDP deflator. This is the answer, right? So this need to be substituted, right? Before that, we'll read the answer. GDP deflator is an index revealed by the information of GDP. It also called implicit price index. That's not much. When estimating domestic product in particular year using current price and constant price, increasing current price depicts an incremental in the price level of the economy, right? So GDP deflator is a measure used to measure the price level of all the final goods and service product in an economy. Goods and service produced in an economy. It calculated as a ratio between the value of GDP calculated at current prices and the value of GDP calculated at fixed prices. It expressed as an index since it should be multiplied by 100. Right? So this is actually a ratio between the nominal GDP and real GDP. So you need to keep in mind which definition. There are a few definitions. So it's better to identify third point. GDP deflator is a measure used to measure the price level of all the final goods and services produced in an economy. So that's the better definition. It's better to be highlighted. Right? Third point. Because others are a little bit hard to keep in mind. GDP deflator is measure used to measure the price level of all the final goods and service produced in an economy. It is calculated. How we calculated that? Calculation is given as it has described, but just what I told you. Just substitute this index, then it's fine. Then here make method down, make method. That's simple, right? Substitute cross multiplication method. So just this will be transferred here and here. So GDP deflator equal in above GDP at market price and below GDP at constant price into 100. That is the GDP deflator. It is a price index, right? Why we call it price index? Because here the below part is price index for the relevant year. So GDP deflator is same as the, because this we did what? We did just the cross multiplication and change the price index of relevant year instead of GDP deflator. We use this name. So this and this is same price index of relevant year expressed by GDP deflator. So within books you can write down this. Right, next one. What's the next question? Question number 10. An important thing of preparing national accounts in a country is to provide an indicator to measure the growth of the economy over a period of time. Right? That means economic growth is a significant component of national account. What does the economic growth rate mean? That's the question. So as the answer, actually, what's the economic growth rate mean? So here we calculate the constant GDP. So when we calculate the constant GDP, what is the incremental of that constant GDP, incremental or reduction? That is the economic growth. So the economic growth is the in 2021, let's say, constant price GDP is, as per the previous example, it was 100,000. And here in 2022, it was 80,000. So this is the economic growth of recession. That means growth can be positive or negative. Let's take some positive values, 120. So we can see 20% growth, right? If it was 105, it's 5% growth. So we just need to take what is this value? This value is constant. That means GDP at constant price. That is right. So you can say the economic growth rate is the percentage of the change in GDP over the last 2 years at constant price to the GDP at last year's constant. There's some mismatch. The economic growth rate is percentage of change in GDP over the last 2 years. Then you need to put years, last 2 years, then full stop, then all the next line should be within brackets. So it's fine. Last 2 years and then full stop within bracket at constant price to the wait. Over the last years at constant price, then full stop within bracket to the GDP at last year constant. So final so it should be corrected as the economic growth rate is the percentage of change in the GDP over the last 2 years at constant price. Then you can cut the rest. Right? Then you can cut the rest. No need. It's useless. So then formula, you just need to do what? Calculate the difference. So economic growth rate or GDP growth rate is equal current year one GDP at constant price minus year 0. The year 1 0 year 1 means the final one, year 0 means previous year. Year 0 GDP at constant price. Bracket, close the bracket, divide by wait. GDP at market price. අරකට හරි. මෙහෙම ගත්තොත් if it was GDP at market price, you need to divide by the constant price. Constant price and constant price. And divided by the year 0, previous year. Year 0 GDP at constant price into 100, right? 100%. So as an example, let's say in 2020 GDP is at constant price. It is 150 billion, 105 billion. 210 billion, and in 2019 it was 200 billion. So let's take the values. Year 1, so they are asking growth rate in GDP growth rate in 2020. So here year 1 is 2020. 2020 GDP at constant price.
So
Yes. Yes.